Another business week. Welcome to Business Incorporated, coming to you live from Lagos, Nigeria. I'm Chimeze Obi Iwago. On the program today, Safaricom, Kenya's biggest telecom company, plans to expand its popular mobile banking service, M-Pesa, into countries such as Nigeria and Angola. The International Monetary Fund may grant Zambia up to $1.3 billion in a 3-year credit facility to help plug a budget deficit of around 7%. Plus, South Africa's Simbaye Gold $1 billion rights issues oversubscribed by almost 5-fold. Let's get started now with the markets, and here in Africa, starting off with back here in Nigeria, profit-taking resurfaced the Nigerian stock market as the new trading week begins. The all-share index was trading low at 0.83%. That's at about midday today. And looking at those numbers there, the Johannesburg Stock Exchange was also trading low, 0.74%. Egyptian market was low, 0.72%. However, in Kenya, the Nairobi Stock Exchange traded up 0.84% on Friday. In the Middle East, Qatar's stock market stabilized today from sharp falls last week after comments from the finance minister that the economy was essentially operating as normal despite a major diplomatic crisis. Doha's index was almost flat after 45 minutes of trade. It had lost 8.7% as of Sunday's close since 4 Arab states cut links a week ago. At intraday, it was up 0.83%. Among Qatari banks which could face funding difficulties as foreign banks scale back ties, Qatar National Bank fell 0.7%, but other institutions rebounded. Doha Bank was up 1.5%. In Abu Dhabi, Dana Gas headed for a 4th straight session of gains, rising 1.7%. It has rocked 49% this month on news that it received a portion of its overdue payments from Egypt and on hopes for its legal efforts to recover money from Iraqi Kurdistan. The Abu Dhabi index was up 0.28% as 6 other shares rose and 5 declined. In Saudi Arabia, the index went up 0.28%. And investors in Europe started the week by taking a cautious approach as they came to terms with a hung parliament in the UK and awaited a meeting of the Federal Reserve later this week. And of course, a raft of other economic data. Let's bring in Ulrich Bartz now, my colleague in Frankfurt, to tell us more. Hello, Ulrich. Thank you very much for joining us. It's actually a busy week for the central bankers this week, from the US FOMC to Bank of England and to the Bank of Japan. What will these decisions mean for the global markets?
It will mean a lot for the global markets. I think each of these central bank decisions can and probably will have an effect on the market, least, of course, or most of all, of course, with the currencies, but perhaps also the equities involved. The most important meeting, obviously, the FOMC, the Federal Open Market Committee in Washington, and there the 4th interest rate hike of the current cycle expected. Anything else would be a surprise, and I think if the Fed did not raise interest rates, then it would be a surprise that would send markets down. Why? Because it would signal that the Fed views the economy less optimistically than previously assumed. So that is something that people will be looking at, as will they be looking at each and every word that Janet Yellen will say about the state of the economy and perhaps future monetary policy in her press conference after that FOMC meeting. Also interesting will be Japan. There is speculation that there will be some kind of exit from emergency stimulus there. That will be also something that will test the markets.
Well, let's look at some of the economic data coming in today. UK's Institute of Directors' latest index showing only 20% of the business group were optimistic over the economy in the next 12 months. Any idea how hard or soft the UK economy will land as Brexit negotiation begins?
I think that's a very difficult thing to forecast because as yet the talks about the Brexit have not even started, and I think the state of the UK economy and where the Brits will be in a year will depend very much on the kind of trend that investors and other market participants will be seeing in those talks. Just this morning I talked to an economist of a bank who is based in London, and he gave the assessment that the people are in a sense in a kind of a disarray. They're disoriented, they're looking for guidance, and this is not the kind of atmosphere in which companies decide to invest more and create new jobs. So the UK economy is certainly not looking for a major surge upwards. How far downwards it will go, I would hesitate to forecast at this time.
Of course, from your home front there, German discount grocery chain Aldi is unveiling a $5 billion war chest to fight U.S.
I can't
Walmart.
hear you at the moment. I think we lost the sound connection to one another.
Okay, we seem to be having issues with the audio there. Well, Orich, if you're still there and you are hearing me, I'm talking about your home front now. That's the German discount grocery chain Aldi, which is unveiling a $5 billion war chest to fight U.S. giant Walmart on U.S. soil by opening nearly 900 stores and other plans. Do you have more details of this grocery fight?
Yeah, okay, good.
Well, we seem to have lost Orich there. We move on now. In the U.S., stock index futures pointed to a lower open today as technology stocks resumed their downward trajectory from the previous session. Dow and S&P futures fell 29 points and 5 points respectively, while Nasdaq futures dropped nearly 40 points. Tech stocks dropped 2.74% on Friday. Our traders also responded to the latest political elections in Europe and looked ahead to the Federal Reserve's latest meeting that's later this week. The U.S. Central Bank is set to announce on Wednesday whether, as widely anticipated, it is to raise interest rates. On the data front, Monday afternoon we'll see the latest federal budget announcement. There are no significant earnings expected this day. Looking at those numbers there, they're all tilting downwards. That's Dow Jones Industrial Average 0.14% down, S&P 500 looking down 0.22%, Nasdaq down 0.65%. In Asia, shares closed in negative territory today ahead of a two-day Federal Reserve meeting that begins on Wednesday. Stocks took a tumble. The Nikkei 225 closed down 0.52%, and South Korea's benchmark Kospi index fell 1% to finish at 2,357.87 as the sell-off in tech stocks spread from Wall Street to Asia. Markets in Greater China were lower. Hong Kong's Hang Seng Index shed 1.18%. The Shanghai Composite slid 0.57%, and the Shenzhen Composite fell 1.099% to close at 1,836 points. Markets in Australia, Malaysia, and the Philippines are closed today for public holiday.